If you want to get access to top-notch real estate advice, Exodus Capital is your go-to place. It is a Netflix of financial education where you get access to hundreds of videos in real estate, e-commerce, social media marketing, and generational wealth for as little as $19.99 per month. Trading versus long-term investing. What is better for you? As financial markets continue to evolve, it's crucial to understand the differences between day trading and long-term investment strategies and determine which one aligns best with your investment goals and risk tolerance. Join us as we explore the advantages, challenges, and considerations of day trading and long-term investment. Whether you're a seasoned investor or just beginning your financial journey, this discussion will provide valuable insights to help you make informed decisions. Let's dive into the fascinating world of day trading versus long-term investing. Day trading involves buying and selling financial instruments within a single trading day. It's a fast-paced strategy that requires constant monitoring of the markets and making quick decisions. Day traders aim to profit from short-term price fluctuations. Here are a few key points to consider about day trading. Time commitment. Day trading requires significant time and attention. Traders need to closely monitor charts, news, and market indicators throughout the trading day. It can be demanding and may not suit individuals with limited availability or those who prefer a more hands-off approach. Potential for quick profits. Day trading can provide the opportunity for quick gains if executed correctly. Traders aim to capitalize on short-term price movements, leveraging strategies like technical analysis and momentum trading. However, it's important to note that day trading also involves risks, and losses can occur if proper risk management is not employed. Emotional and psychological challenges. The fast-paced nature of day trading can be mentally and emotionally demanding. Traders need to remain disciplined and manage their emotions to avoid impulsive decisions. It's crucial to have a solid trading plan and stick to it, even during times of market volatility. Long-term investing, on the other hand, involves holding investments for an extended period, often years or even decades. It focuses on the fundamental value of assets and aims to benefit from long-term growth. Let's explore the key aspects of long-term investing. Less time-intensive. Compared to day trading, long-term investing requires less time and active management. Investors can take a more relaxed approach, periodically reviewing their portfolios and adjusting as needed. This makes it suitable for individuals with busy schedules or those who prefer a more hands-off strategy. Potential for compounding growth. One of the main advantages of long-term investing is the power of compounding.